All right, we are gearing up to talk to Mr. Brian Bogaert, and he is got an incredible company called Next Level Success. Is that right, Brian?
Yeah,
Yep.
absolutely.
Perfect. And so Brian is going to be talking to us about something I'm passionate about as well. And we've talked a lot about in the coaching program and just a lot with realtors in general, which is we don't want to be the cobbler that doesn't want any shoes, right? So we're talking about we have this amazing product that we're promoting and selling and encouraging people to buy. But it's amazing to me how many realtors don't actually invest in what they are selling. And Brian and I were talking a lot about this before the program. And so Brian is an expert and a specialist in helping not just realtors, but lots of different people from lots of different industries really embrace the idea of investing in real estate as a path to financial freedom, along with private lending. And so I think Brian's going to give us some great insights into that topic today. So Brian, welcome to the program, my friend.
Hey, I'm super happy to be here, Jim. Thanks for having me on today, and really excited to dig into some of this material because I can tell both you and I love talking about this subject.
Yeah. So one of the things that we were talking about a little bit too is real estate's kind of can be a little bit of a hill and valley business, and one of the things that investing does for you is it creates another income stream which helps you to not feel that pressure. The best agents in the world are ones that are already financially free and they're not relying on a commission to pay their bills, right? And so now they give better advice. They're much more at ease. They're more relaxed. And so it's such a much better place to be mentally. But I want to start from the beginning. So you're wearing a shirt that's got Morpheus on the front of it. I know there's a story behind that. So let's walk people through how you got into the investing world, Brian, yourself.
Yeah, thanks, Jim. So, I love to tell people I'm a regular guy that used to work 9 to 5 in the corporate world up until about 15 years ago. But and why I love the Matrix metaphor so much is that was my life. I was Mr. Anderson, for those of you who are familiar with the movie, right? I was going through life and I had a good life. Like, people looking at my life would have been like, wow, this guy's doing pretty good. But I just wasn't satisfied. I knew there had to be more. And just like Mr. Anderson in the movie, I was desperately searching until the white rabbit came along to show me the path. And it turned out to be my Morpheus was sitting right beside me in the cubicle next door at work, and he was investing in real estate. So him and I started going out for some lunches and talking more. And I did one property with him. Then I did a second property with him. And he showed me his whole process of how he was doing this and basically cookie cuttering it. And I said to him, I just read Rich Dad, Poor Dad, like a million of us had, and or 10 million or whatever it's up to now. And I said, Rich Dad says we should start a company and start partnering with people and do this on a bigger scale. And, he was a bit of an introvert. So he said, Brian, if you want to deal with the people, I'll manage the properties. So we literally incorporated a company, which I still own to this day, and we started partnering with people. We became the operating partner who did all of the acquiring and the paperwork and finding the tenants and all that fun stuff. And they were the ones that put up the deposit and qualified for the mortgage. Our goal was to do 100 units in where I was living at the time, Calgary, Alberta, out in Western Canada. We did 25, but Calgary went like this, much like we've seen over the past year and a half in a lot of the markets in Canada and the US. So our 25 units did better than what we were predicting for 100 units. So in early 2008, we went to our investors and said, buy low, sell high. Now is the time to get out, liquidate what we've had, enjoy our profits, not get greedy. That's what we did. And we all know what happened later on in 2008. So we looked like pretty good superheroes to our investors. Now, being, we didn't see that coming. We were just following the fundamentals of investing, which is when things go up, eventually they are going to turn around. So that's why we chose to sell.
So let me ask you this. So for people starting out, so it's interesting that, realtors, even though we're in the business, are still starting out as fresh investors. We bought our own home we live in a lot of times, but, we all got to start with step one, which is buying your first property. What does that look like for your clients and who you coach? How do you coach them through that kind of first step process?
Yeah, well, there's another funny piece to that, and I make a point of never forgetting this. So I said I did a couple of properties with this partner of mine at the time. I remember the first offer we were going to make. a realtor and my partner were sitting at his dining room table and I was doing laps. This is crazy. What if I lose all my money? All this sort of stuff, right? So I remember those feelings of pulling the trigger on your first potential investment and how scary and crazy it can feel, right? So I very much am in tune with that and those emotions, and we absolutely deal with it. But actually, Jim, I want to take a step back because I have a saying that there's no such thing as a good investment. It's whether it's a good investment for you. Okay, so the very first thing I do with any clients that I work with is we go through what are your goals, your 1, your 5, and your 10-year goals. Where do you want to be in the future? And from there, we can then start to create a plan on how you're going to get there. And does that involve buying 1 property, 10 properties? Does it involve going into other things, looking at even like crypto? Or you mentioned, I'm also a big fan of private lending, the existing investments that people have. That's really where I start on day one with people. First of all, because I want to understand where they're trying to get to. And second of all, most people aren't even clear on that. They hear from someone else, oh, this sounds like a good idea, I should do it. But is it really in line with you and your personality and your goals and what you even have access to? If you got $1,000 in the bank, you're probably not going to be able to buy a property right away, right? Yeah. So it's completely and absolutely dependent on the person. But that, I've created a curriculum that really starts there and deals with people's mindset. Because like I said, I remember what mindset I was in when I was doing laps around the dining room table. So, I absolutely deal with, are you in a mindset of abundance or in a mindset of scarcity? Because if you're operating from scarcity, you're never going to move forward on purchasing a property or any other kind of investment. All you're going to be focused on is, oh no, I'm going to lose what I have, right?
Right. So one of the things that I coach to is my mindset is I want all of my coaching students to set a goal of buying 1 property a year, because in real estate, we are independent contractors. We don't have a retirement plan. Most of us aren't really great at doing 401ks and all the things we're told to do. So having that investment kind of mindset of I'm going to invest in 1 property a year is kind of a good goal to have. And that means that in most markets, if I'm the one funding in this, I got to come up with 25% down, which means I need to take that into account when I'm building my goal set. So I have my goal set for the year. I add 25% so that, or what I know the down payment will be on the house as a part of my larger goal, so I can hit that. I'm curious for you, when you started investing, you're not a realtor, and I want everybody to understand that that's watching this, but you still used realtors, which I love this kind of story. Now, why? A lot of people would think, well, I'll just go buy owner, I'll skip the realtors, I'll circumvent the realtors, I'll try to get away from the realtors to save the fee. That wasn't your attitude, I take it.
No, not at all. Because I recognize that, most of the realtors out there are professionals who specialize in what it is that they do. Now, could I have learned some of that? I mean, I certainly have along the way and then dabbled. Yeah, but that's not the way I wanted to approach this. This was something I was in for the long haul. I was doing it from a business standpoint, and I was dead set on achieving my goals. And I knew that having partners that specialized in other areas would allow me to achieve that much sooner and much easier. So right from the beginning, my partner and I promised that we were going to work with other professionals who were better at what they did than we were if we were just going to be dabbling. And that's how I wound up actually working with a lot of realtors over the year, because when they saw what we were doing, they were like, how do I learn about some of this? Like, I got 1 or 2 properties, but you guys have got 15 properties here. And so I just started working with more and more realtors, really got into their ecosystem and learned about the challenges they face. Like you said, the ups and downs, the roller coaster, the seasonal type of business. And here's something for a takeaway for all of our realtors listening today. You want to take one thing away from this conversation that Jim and I are having today, take this. Stop being focused on gross revenue. Okay. The realtor industry, all the awards, all the talk, all the fancy parties, it's all focused on gross. Okay. I have a saying, and I said this to you earlier, realtors are fantastic at making money and they're crap at keeping it at the end of the year, right? If you're making $1 million a year, but your expenses are $1,100,000, you're still not going to make it in the long run. And you're going to have to work until you die.
That's
right?
right. Yeah.
So I teach all the realtors I work with to start focusing on net revenue. What is the actual money that's coming to you and landing in your bank account? And then we make sure we've set aside some for taxes, right? We've set aside for fees and the other things that we have to pay and insurance and all that. And then you hit the nail on the head, Jim. There should also be a portion that's being set aside for producing additional sources of income, like getting a property every year, or maybe doing some private lending or something else, because customers can smell desperation on you when you're coming to do a listing presentation or that sort of thing, right? And how many of you out there have had to take on a client, not because you wanted that client, not because you would ever have decided to, but you were desperate for that next commission check? Yeah. How much more empowering is it to say, you know what? I'm not the best person to help you. I'm going to recommend you work with someone because you're not chasing that next commission. You're working your plan. You've got additional sources of income for the quiet times based on your investing, and you're pulling all the different levers in your business, right? That's, like you said, the realtors who are already either on the road to or have achieved financial freedom. That's how the best get even better and the rich get richer, by having this plan and then sticking to it and not having to come from that place of desperation. And I've had those types of realtors present to me as well, right? And you can see it coming right a mile away.
Yeah. So I think one thing that's interesting is like-minded people attract like-minded people, like the law of attraction, right? Which is interesting because when you are an investor yourself, you're going to end up talking to other investors, and it's just going to be a natural byproduct of that. But what I think is interesting, because lots of times when you are kind of getting into this mindset, you start to meet other people, and you can actually build a really good network that could actually serve your real estate business at the same time. You're going to be meeting plumbers, electricians, and handymen, and other investors and buyers and sellers. And so it creates this kind of synergy around it as well. One of the things we coach to is identifying 5 or 10 investors in your market and starting to be a resource for them. And if you can find these serial clients like yourself who bought 25 properties, ended up selling 25 properties over a 10 or 15-year span, that's a lot of business for most realtors, right? So I think that's really interesting. But you mentioned private lending, and I want to stay there as well. I'm somebody like you that owns a lot of real estate, but also has done a lot of private lending. But I don't think a lot of people understand that. Kind of explain what that means. I mean, simple terms.
Yeah, absolutely. I mean, the simplest way to put it is you become the bank, right? Yeah. I mean, this is the banks make the vast majority of their money by lending out money for a higher interest rate than what they're paying somebody else. So it's about becoming the bank. And, you kind of touched on this in what you just said. Like, I think that realtors and brokers out there have the equivalent of insider trading into real estate investing and private lending, right? Yeah. If you had access to this same kind of information in stock of investing, they'd come and arrest you like they did Martha Stewart, right? We have all this data on these people. We understand their financial situation. We often understand their goals. We know what they're capable of doing, what their existing portfolio is. We have all this information. Well, first of all, you can become an expert. If you yourself are investing and learning about this, then you just open yourself up to another category of potential buyers and sellers who are probably going to do repeat business, like you just said, like someone like myself, right? I'm a realtor's best friend. You're going to do more transactions with me in 5 years than you're going to do with 25, just buy one house and that's it for most of their life, right?
Yeah.
So that's the first thing, is you now open yourself up as an expert. You can start to work with a new group of people, but you have insight into their financial situation. Private lending is basically about, I've got an amount of capital, an amount of money, which I am willing to lend out to qualified borrowers. And I'm going through the exact same process that the bank is going through when I do that, because they need that money for some reason. A classic example in the real estate world would be bridge financing. How many times do we have a situation where closings don't quite match up, right? They're not going to have their money to be able to close this until such and such a date. What if you could step in with capital, charge double-digit returns for that 2-month, 3-month period, and be making an additional source of income with capital that you just had sitting around anyway,
Yeah.
right?
Mm-hmm.
So it seems to me, again, like a no-brainer. Why wouldn't realtors and brokers be looking at this as an add-on to their business? It's going to help you get through some of those tougher times. Now, again, you're absolutely still having to qualify these people, and you're asking for collateral with that loan. Usually, if it's in a real estate deal, it'll be one of the pieces of the real estate or part of the equity inside of the deal. So that's the other side of it, is you get to cover your money right from day one, so that if this deal goes kaflooey, well, I just bring in the collateral that I had here, reducing your risk to about as close to zero as you can possibly get. And as I mentioned, we're talking double-digit returns oftentimes in these private lending situations if you do enough deals or you spread them out, that sort of thing. What a way to increase income rather than just always chasing buyers and sellers.
In my office too, what I see happening a lot, we have 180 agents, so you will get an email through the email system that says, hey, I'm looking for hard money meaning I have a borrower that won't qualify for the bank because they haven't been on the job long enough, or there's some mitigating circumstance. And so they'll come to, the group and say, who's got a lender? That lender could be you, where you say, hey, I'm willing to lend some money as long as that borrower meets these certain standards that you determine and has a pretty good loan to value ratio. And I've done that a lot, where I've earned 8 to 12 to 14% interest, and higher than that in some cases. And also putting yourself out to lenders in the marketplace who are traditional lenders, but also end up talking to borrowers that can't qualify for traditional lending. Another quick example of this that I've seen an agent in our office use, you have to check with your local laws and see if this applies to your local laws, but is offering to lend the seller money to fix up their home to prepare it for sale, which is a really interesting.
Wow, I like that. I like that a lot.
Short-term loan. It's secured by the house. The house gets closed. You get paid off. So, I mean, it's like a win-win-win, and you get the listing. Like, when are the realtors lending their client money, right, to get the listing?
Well, and you make an important point in all this, whether it's lending in order to do the renos, or if it's doing bridge financing, aren't you ultimately, as a realtor, trying to do everything possible to make your deals close and be able to find ways to, I mean, there's a lot of realtors that specialize in the deals that nobody else wants to touch, and bringing those over the goalpost, right? So if you now are creating these ways where you're going to benefit and you're closing more deals, that's a win-win-win in my game. And even if you're not the one lending, you go with some of those other traditional lenders, they'll pay commissions and fees for finding people, right? Qualified people and all that. So even if you don't have a big wad of cash to be able to do the lending, just matching the people together can still be a source of income for you.
Yeah, absolutely. So let me ask you a question, because there's a difference between investing in real estate. A lot of people are doing flipping for a lot of years. I'm not a big believer in flipping. It's not my game. People make money doing it. It's not my thing. I'm more of a long-term hold. What's your take on short-term flippers and long-term hold? Are you a long-term hold? Are you an advocate for either one? What's your thoughts?
So it's interesting you asked that question, Jim, because I tell people, of all the types of real estate transactions that you can do as an investor, flipping is the one that most people have heard of that I've never done. And it's for exactly what you're talking about. Whenever I've gone in and evaluated a flip deal, I usually walk away because I'm like, no, I can't mitigate my risk, right? One of the things that's really important to me is what I call, there's 3 levels of protection that I look for: protection of capital, protection of returns, and protection of exit strategy. And what I typically don't like with flips is there's only one exit strategy. The other 2 exit strategies are way too high risk. If I just put $150,000 into a property, am I going to want to rent that out if the market suddenly changes? And no way, right? Mm-hmm. So I am more of a long-term investor. The closest thing that I do that could be categorized as a flip is pre-con constructions. So I have bought units when these big builders. I live in Toronto, so we have a lot of construction going on. There's a lot of of condo units being built on a regular basis. So I've bought units very early on in the platinum level, when it's just a parking lot. And then I get to the end. Now, in some cases, I do close and hang on to them. And maybe even for 5, 10, 15 years, if it's a great property that I'm making good cash flow on, I might sell soon after closing. And occasionally I've even done a couple of assignments before closing. So that's probably the closest thing that I've done to a flip, but you're still talking about a 5-year time period. I'm not one of these guys that's like 6 months or 12 months, we're going to flip.
Right.
There's too many factors going on in the market for a guy like me. A lot of people think because I'm in real estate, private lending, crypto, that I must be a gambler. I'm not. They would never make a TV show about the way that I invest because it is boring. Nobody would watch it, right? I'm sitting there with spreadsheets and running numbers and checking things out and calling brokers. Who wants to watch that? Right? So no, and that's why I'm not a fan of flips.
Got it. Okay, that's really, really interesting because I'm not either, and I'm the same. I'm the same way. I've owned a lot of real estate. I own a lot of real estate, but I've never done a flip. It's not my thing. And I think that it's a little bit, when you talk about gambling, I think that is to me the most gambling part of real estate you can see. People can get really caught on the wrong side of one of those things and really get crushed, and that's a sad thing to see.
Yep.
So talking about exit strategy, we're all watching the market. The market is different, I know, in Canada than it is here, but, similar in a lot of ways. What's your thoughts on the current markets? Because we've had a pretty good run here for the last several years. Are you feeling like we are at the top? Are we coming off the top? Do you feel like we still have room to run? What's your thought process on what's happening with the market right now?
Great question. And obviously one that's on the minds of everybody at this point. So again, this one brings me back to something that I like to explain to people. There's no such thing as a Canadian real estate market or a US real estate market, right? Yeah. There's not even a Californian real estate market or an Oregon real estate market or a New York real estate market. Real estate markets keep going down and down and down and down until you get to even which side of the street you're on in a particular area, right?
Right. Yes.
So one area might still be poised for massive growth, and another area might be poised for going down. And even the type of real estate. One of the things that I found up here in Canada a few years ago, we had a change to the mortgage rules, and so all of a sudden, single family homes and even like townhomes and stuff just fell off a cliff. But condos continued to chug along because now that was the only thing that people could start to qualify for. So even in the same areas on the same street, potentially, you've got different categories of real estate behaving in different ways. And this goes back to, Jim, why I decided to continue to work with realtors for my entire investing career, because these are the people that I know that are going to be able to, the good ones that are working like this and know investing themselves. They're going to be able to provide me with this insight, with this data. You ask my realtor, we would go down to the actual complex. We would walk the streets and time how long to the nearest subway station and all this sort of stuff. Like, I am a data-oriented investor. And so I'm depending on those professionals in order to help me go through that. So the answer to the question is, it totally depends on the category of real estate and where you're looking. Yeah. What I will say about this now is, a few years ago, let's say shortly after we had that initial dip when the pandemic started, and then real estate started to take off.
Yeah,
those were kind of like the easy time period where you could pretty much throw your money at just about anything and make money on it, right? Yeah. Now we're starting to move to a period where we're going to be separating the wheat from the chaff. The real investors who know what they're doing and understand that the market is changing versus the gamblers who are just like any opportunity that shows up. I'll take the pre-con again as an example. Pre-construction condos that I've done. I've done 9 of them at this point now. I like to say that it's the top 5% of pre-con projects. I call them unicorn projects that I'm interested in. And so I have a whole system and set of criteria that helps me identify the unicorns from the 95% of the chaff that I think is too risky or that may not make me money in the long run. And so far, knock on wood, all of my 9 have been profitable because I'm using that process and identifying it. So that's what I actually think is the most important thing right now, is work with the professionals, trust the data and the information that they're bringing to you, and do your due diligence and look for those projects that you really, really in your heart believe are going to make money, regardless of what starts to happen in the overall economy and that sort of thing, right?
Really interesting. Yeah. Because when you're long, that's the difference between short-term investors and long-term investors. Short-term investors are so market driven and market like panickers, but long-term investors, they expect cycles in the market. When you mentioned Buffett, exactly the same thing. He's a long-term investor. He buys these companies and he holds them forever. I mean, he rarely sells a company. Yep. So the same thing is true. I mean, you go back in time and say, would you buy a house now if you had an opportunity to at a 2006 price? All of us would. Would we have done it in 2009? No, but over time it evens out, right? It doesn't really matter over time, right?
Absolutely.
So it's really interesting when you bring that up. And I do think regardless of market conditions, there's opportunities in every market. I love that, the way you
every market, right? It's one person's problem is somebody else's opportunity if you know what you're doing. And this is again why it's so important to go back to your goals and your investing criteria, because an investment opportunity that I might say no to, you might say yes to, because we have different goals and different investment criteria and different things that we're trying to accomplish, right? So it's so personal like that. And I shudder every time I see these generic investment advice things going out, and you should do this and you should do that, because that's where people wind up getting into trouble. Investing really is a personal type of endeavor, right? And yes, there are some basic foundational principles, but there's other steps you have to do to really identify. I mean, I have clients that we had a bit of a downturn in 2017 after those mortgage rules came out. And some of them chose, people that I knew in my circle of friends that chose to buy anyway. And when I was telling them now's the time to sell when prices are going cuckoo. And then, the market went like this. So 4 years later, they've still made money. They bought at the peak of the market. That was the worst possible time. They've made money, not as much as I made potentially, but at least, they came out all right. Warren Buffett has another expression, you find out who's swimming naked when the tide goes out, right? As long as you don't have to sell in that first 6 months or year or whatever. Yes. So us long-term investors, just set up your portfolio so you don't have to be in that panic, anxiety sell, ignore the headlines, and really stick to the fundamentals.
No panic selling. We don't allow that.
Nope.
Okay, Brian, you're obviously an expert. I'm sure some people would love to jump in and look at your coaching and look at what you're doing. Where can people find you?
Well, so the easiest thing to do is I'm sure we'll throw out some stuff with the podcast with my name. You can look for me on Facebook. You can look for me on LinkedIn. You can look for me on Instagram. I'm regularly putting up stuff there. My website for my company is so the name Next Level Success Coaching. So NLScoaching.com. That's how you'll find me. But easiest is probably just to search on my name. My email address is brianb@nlscoaching.com. I've actually got a couple of interesting programs right now. One of them specifically for realtors on pre-con. We're going to be starting that one up next month with some realtors who have come to me and said, Brian, I want to get into like selling pre-cons to my customers, but I want to understand them. What can I do? I'm like, let's go through my program, and you'll see exactly how I buy, sell, find, negotiate my pre-con deals. Then you're going to be able to take that information and be an expert for your clients. So that's something that I've got coming up. And then I'm always doing regular programs on just like how to get into the private investing world.
Brian, spell your last name so everybody that's looking for you can find you.
Yeah, absolutely. Because as I said to you, we throw in an extra letter there. So my last name is spelled Bogaert. So it's pronounced Bogaert, but I've got that extra E in there after the A, just so all the telemarketers, I can always tell who a telemarketer is. They always pronounce my name wrong. So
yeah. Well, Brian, it's an absolute pleasure. And thank you so much for being on the program. I know a lot of people are going to get a lot out of this, and I'd be excited about considering and becoming a long-term investor.
So thanks, Jim. I get the feeling you and I could talk for about 5 more hours on this subject. Something we're both passionate about, and passionate about introducing this to other people, right? Because then we got more friends to play with in the investing community, right?
Absolutely. All right, my friend, have a fantastic day. Thank you so much for being on the program.